Most people don't lose money in Dubai because the market is bad. They lose money because they buy the wrong thing for the wrong reason. And the tricky part is this: the mistakes aren't obvious at the start. Everything looks phenomenal on day one. Everything looks incredible. The renders are perfect. And when everything sounds good, you stop seeing clearly. It's very easy for an agent to send you 10 projects. Anyone can do that. Before I buy anything, I ask, who is the future buyer of this asset? Before we get into today's episode, I want to share something quickly. After building my last podcast, the Health Formula Show, to over 400 episodes, I realized something pretty crazy. Over 70% of the people listening to it weren't actually subscribed. And that matters because if you're serious about learning, staying consistent, and actually applying what you hear, subscribing makes a huge difference. So if you're serious about investing, creating long-term financial freedom for yourself, and making smarter, more informed decisions, hit the subscribe button. It really helps the show, and more importantly, it makes sure that you don't miss what's coming next. Most people don't lose money in Dubai because the market is bad. They lose money because they buy the wrong thing for the wrong reason, usually very confidently, and usually with someone telling them it's a great deal. And the tricky part is this: the mistakes aren't obvious at the start. Everything looks phenomenal on day one. The problem only shows up years later when you try to exit. So in this episode, I want to walk you through how smart investors actually buy property in Dubai. Not the version that you hear in sales meetings and not what glossy brochures tell you, but how decisions are made when real capital is on the line. So if you're considering investing here in Dubai, or if you are already in the market and you want to sanity check your thinking, this episode will really help you avoid the mistakes that don't look like mistakes at the time. So I want to start with something that doesn't get said enough. It's just as important for investors to understand what not to do as it is to hear about opportunities, because it's very easy to get lost here. There is a lot of noise in the market. There really is a lot of launches, a lot of people telling you that every single dirham you invest is going to turn into something absolutely extraordinary. And that's just not how real investing works. I see this all the time. Very smart people, successful people, people who understand money come into this market and suddenly feel overwhelmed. Not because they are inexperienced, but because everything sounds good. And when everything sounds good, you stop seeing clearly. Dubai is an incredible market. Yes, I believe that, but it's not magic. You don't just make money just by being here, just like that. You make money by making the right decisions and by avoiding the wrong ones. And that is what I want to focus on today. Cutting through the noise so that you can think more clearly. And I want to flag something here, especially if you're watching this on YouTube, because towards the end of this episode, I am going to share the single question that I use myself to decide whether a property is actually investable or not. And it's a question that instantly filters out most deals in the market. Very simple. Yes, it's uncomfortable, but it's very important and most people never ask it. So if you stay until the end, you will really understand exactly why some investors exit cleanly in Dubai and others end up stuck holding assets that they cannot sell. One of the biggest traps investors fall into here is what I think of as the glossy brochure effect. Everything looks incredible. The renders are perfect. The returns sound guaranteed. And yet, the most important question often goes unanswered. Is my capital actually safe? A lot of advice in this market is not designed to protect you, by the way. It's just designed to sell a unit. And when incentives are misaligned, that is when people overpay, they buy into stalled projects, or they end up holding assets with no clear exit later on. So clarity doesn't come from seeing more deals. It comes from having better filters. Most people, they begin by looking at properties, floor plans, views, prices, but smart investing works the other way around. You start with strategy, not selection. Before looking at a single unit, you need to know what job this asset is meant to do in your wider financial picture. Is it about long-term growth? Is it about income, flexibility, optionality later on? What is it? Once your objective is clear, the universe of quote-unquote good deals becomes much smaller and much clearer. And this company was built by people who have invested real capital into land, people who have dealt with agents, dealt with developers, and really experienced firsthand how difficult it can be to get just clear, honest, data driven advice. Let me pause for 10 seconds because I've created something that might really help you out. It's called the First Time UAE Property Buyer's Blueprint, a practical guide to how international investors buy off-plan in Dubai and Abu Dhabi step by step. The link is in the show notes below or below this video if you're watching this on YouTube. Investors don't just want to know what to buy, they want to know how it fits into the wider financial picture. We're talking about leverage, liquidity, and flexibility. All of that is just as important as the asset itself, especially for UK investors moving money into Dubai. Confidence without data doesn't mean very much, does it? Every recommendation that we make is backed by numbers, transaction history, comparable buildings, supply coming online, and pricing trends. So when you make a decision, you're not relying on hype or urgency. You are relying on data, pure information. That data lens matters a lot because brochures rarely tell you what actually affects performance long term. A developer's track record is part of your security. You need to know that. Not just how well a building launches, but how it's maintained years later, how service charges evolve, how issues are handled post-handover, and future-proofing matters way more than people realize. I have to say that investors often buy what they see today without thinking about what will exist around that asset in 5 years. Supply coming online, infrastructure, whether that open view is actually protected. Are you going to have another building built right in front of your window? 2 units in the same area can behave completely different over time. So personally, I don't really love calling myself an agent because I don't like that term. It never felt like it fit. I see myself more as an advisor, an investor advisor, someone who does the homework for you, the due diligence, filters the noise, and really then brings you a small number of options that actually make sense to you. And that approach comes naturally to me because of my background. I trained as a lawyer in London and then I shifted into functional medicine and nutrition. And then I built and I scaled a wellness company from the ground up in the UK. There were no shortcuts. It was very data driven. I've built businesses, I've raised capital, I have worked with sophisticated clients. And the common thread in all of that is doing the hard work, not the easy work. Doing the hard work also means asking uncomfortable questions. What happens if completion is delayed? What if rent just soften? What if interest rates move? What if the unit just sits empty for a period of time? If an investment still works when you look at it through a conservative lens, that's when it becomes robust. That, my friend, is a good investment. Best case scenarios, they sell deals. Worst case thinking protects capital, and property is exactly the same. It's very easy for an agent to send you 10 projects. That's an easy job. Anyone can do that. It looks productive, but it usually isn't, because when you're shown too much, you just stop seeing clearly. You start comparing things that are not meant to be compared. And eventually you do nothing or you make the wrong decision. Too much choice does not protect your money. It delays decisions, and delays cost a lot of money. I am very comfortable saying no to deals. I am not interested in throwing spaghetti at the wall and seeing what sticks. I believe in doing the harder work, narrowing it down, and going deeper, granular. And this is where I'll come back to that question that I mentioned earlier. Before I buy anything, I ask, who is the future buyer of this asset? And why would they want it? If you cannot answer that question clearly, you're not making a good investment. You're hoping. Exit thinking is not about selling tomorrow. It's about making sure liquidity exists when you need it. That means looking at entry price. That means payment structure, developer track record, handover timing, and who the eventual buyer really is. Because two investments in the same location can behave completely different. Completely different. Different returns, different risk, different exit options. One might suit a flip. Another one only makes sense long term. One works for rental yield. Another attracts end users later on and then performs better on resale. So I'm not just asking where something is. I'm asking why this one and whether I would invest in it myself. That is where ethics come in, because it's very easy to tell people what they want to hear, but it's harder to tell them what they don't want to hear. And just to address something that I'm asked a lot is, do you need to be here in Dubai, in the UAE in general, to buy a property here, to invest? No, you don't need to be here. But serious investors, they treat this like a business decision. They delegate analysis and execution while staying involved at a strategic level, okay? Being overseas is not a disadvantage if the process is set up properly. So if you're feeling overwhelmed by this market, that does not mean that you're behind. It just usually means that you care enough to want to get it right. You don't need to rush and you don't need to see everything. But what you do need is clarity, is context, and advice that is aligned with your interests. So I want to end with this. You don't need more information, but you need better filters. Good investing is quiet, it's patient, it's very intentional, and it can be a little bit boring, okay? It's not like super exciting, it can be a little bit boring, but boring decisions protect capital, and that's the goal. And that is how I work, and that is how I advise my clients. And just to say this before we wrap up, it's one thing to understand all of this in theory, and it's a completely different thing to implement it in the real world. Everyone's situation is different. Different time horizons, different risk tolerance, different capital structures, different goals. And that is exactly why there's no such thing as one size fits all approach. And if this episode has resonated and you really want to think through what this could actually look like for you personally, the best next step is to book a private call with me. You will find the link in the show notes or just below this video if you're watching this on YouTube. Was this a little too much information to absorb? Don't worry, I've put everything together in a simple one-pager with everything you need to know. It's all done for you. Just download it using the link in the bio. If this episode helped you become a more savvy investor and you now feel like you understand what to look at before investing, but you're still unsure what off-plan property actually means, how it works, why global investors use it, and whether it's right for you, make sure that you watch the next video because it really breaks down that structure. You know, the structure of Dubai's off-plan market in a very, very practical manner, especially if you're new to investing here.